Introducing Iron Beam.
Might help if I unmuted, wouldn't it? It'll help if I unmuted, wouldn't it? How y'all doing this evening, man? Hopefully everybody doing well. Good evening, good evening, good evening, everybody. As y'all saw on the screen a few seconds ago, this is the intraday price action recap. And if this is your first time tuning into Tim's Tidbits, just hush. Nah, I'm just playing. I like to say, whoa. If it's not the first time tuning into Tim's Tidbits, still want to say, welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Araña Grande. It's a big old spider. If you don't hablo español, that's all. A big old spider. And like I said before, this is the intraday price action recap. I ain't gonna be before y'all long, cause I had to go back and finish watching The Accountant 2, because I was sitting on the couch trying to watch it, and for some reason, me and that couch got a good old relationship that when I lay down to watch TV on it, she just put me to sleep. She just put me to sleep. So I just woke up, had my alarm set for 5 minutes to 6, because I knew I was going to go to sleep. And I just rewound it back to the part I remember seeing and pressed pause. Who we got in here, man? Y'all drop something in the chat so I can see who in here. I see Here to Learn and Share up in here. Hey. I see Kim. Hey. I see Felicia. Hello. I see Valentine. Hola. I see Deborah. Hello. With the echo. Shout out my road dog Cheryl, man. Shout out Cheryl, the most faithful member of the gang. The most faithful member of the gang. I'm going to share the link. I've pinned the Zoom link to the top of the chat. If you have anything you want to ask of me, feel free to click on that link that's pinned to the top of the chat and pull up in the Zoom. Right. And let's go ahead and get right into it, man. Sharing of the screen. Let's look at the chart, man. Excuse me. As you can see, that these are 1 minute candles. Right? These are 1 minute candles. I'm gonna put that right there. Right. So that I can see what a goings on the top, and I can see what I am sharing. So I can see what I am sharing. Yeah. All right. Let me turn my fancy dance, y'all. Y'all can follow the bouncing ball. Follow the bouncing ball. Follow the bouncing ball. So today, price went sideways, price went up ways, then price went down. Price went down. This is 6 o'clock. Last night when we started, price consolidated most of the night, and then in the London we took out the high, then we came and took out the low, and then we took out the high again, then we came and took out the low, and then we took out the high again, and then we came and took out the low, and then we drop, 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 drop. And that's the price action. That's all. What y'all got for me? Hey, man. That's all price did. Had us a typical, you know, back and forth, back and forth. Ugly price action as expected. All the way through most of the morning. Price cleaned up a bit. Like after I say this drop here at like 10:35, price cleaned up pretty nicely. It made a move up, and then it made a move down and down and down from clean move up, right? Very nice algorithmic move up, clean move down. Very nice algorithmic move down. But from 6 p.m. last night up until about 10:30, price was just nastiness. I was watching the charts last night trying to trade nasty. I didn't wake up during the London, right? London looked like it may have presented something. I didn't wake up for it though. Pre-market, I was trying to trade, didn't really give anything that I liked, right? We had a crazy news candle that wasn't the news that was slotted. I'm thinking this was based off of a headline that popped out at around 8:50, 8:49, 8:50, that President Trump had a phone call with Xi Jinping, or however you say the Chinese president name. Because as soon as that headline dropped, the market shot up like this right here. And that wasn't even that, because the news came out back over here, right? The news came out back over here, but this looks like a news candle, but this when that headline came out, and that's when we got that spike right there. So, but let's go in here and look at the price. Even though the price wasn't the most beautiful throughout the beginning set parts, like this is the night, you can see here I got it marked. I still got it marked out from this morning when I was in here trading, right? This is 9:30 open, right? From 9:30 open, right, over here to about 10:30 or so, right? From here, from this manipulation drop right here over to here, this was just a bunch of nastiness. I didn't get anything that I really was comfortable with doing anything with. in this area here, right? Nothing just stood out as like uber comfortable, right? This short right here, I know this short looks this short here looks pretty clean in hindsight, but while watching price, nothing was like super comfortable right around here. Okay. But all this right here, after this manipulation down, beautiful price action, right? Very algorithmic price action moving here, very algorithmic price action here. Beautiful, beautiful, beautiful price action. Okay. So let's go in here and we're going to zoom in. What I'm going to do, take a fancy dancy line here, right? Put a line here. This is the start of the kill zone right there. Right, that's the start of the morning kill zone there at 7:30. Y'all already know I personally like to wait until after 8:30 because that's when the news embargo comes out before I start trying to trade anything. But this is the start of the kill zone here. Okay. Now, who can tell me based off of the 2024 mentorship when Michael was teaching Caleb what to look for in trading? What is the time that he said to start looking for the market engineering buy side and sell side? What was the time? He told him to start looking for highs and lows and relative equal highs and lows being formed after what time in the morning? Who can tell me that? Drop it in the chat. And if you're in the Zoom, you can unmute and tell me. What time did he tell Caleb to start looking for the market to be engineering liquidity? Highs, lows, relative equal highs, and relative equal lows. We have a 7 o'clock. We have a 7 o'clock. We got to 7 o'clock on the dot. I'm in my drop top, cruising the street. We have a 6 to 9. Shout out Steve Henley. Hopefully I pronounced that right. 6 to 9. Shout out Steve Henley. Michael J. Huddleston told Caleb, he said from 6 a.m. up into 9 a.m., look for the market engineering liquidity in this area here. And the highs, lows, relative equal highs and lows started from 6 a.m. up until 9, right? You want to see how price engages with them, right? And you're looking for trades, right? Up until I think it was 11. I think the time that he gave Caleb, up until 11, right? So me, I like to look, okay, this is the kill zone, right? This helps me identify, okay, boom, this is the kill zone, right? So I'm looking at the kill zone. He said starting from 6 to 9, right? He said start from 6 to 9. You're looking for, right? Because you're not going back prior to 6. He said you don't have to go back. You don't have this. And this is not saying you shouldn't. This is just for somebody who's new to trading, don't really understand the London, don't really understand the Asian and you just want to focus on the New York session, right? You don't have to go back prior to 6. Starting at 6, you're looking for what price does to the highs and the lows, right? That's the liquidity pools you are looking to trade within. Okay, so I'm going to take this, I'm going to move this over to 6 a.m. All right, 6 a.m. Here we are. So starting at 6 a.m., you see we created a high right there at the prior day's high. Right now, mind you, we have engaged. This is when we started over here. Right, this is the start of the day. I'll put it in there, 6 o'clock there. Let's put all the important times. 6 p.m. open. What's up, Michelle Tucker? Midnight, aka True Day. I know y'all see me. I know y'all see me change that. I know y'all see me change that. 6 a.m. All right. So again, this is for people who's focusing on the New York session, and you don't have to worry about the London. You don't have to worry about the Asian, right? If you don't pay attention to that, or you have no idea of this even existing, right? You don't understand it. This concept just gives you something specific price wise and specific time wise to look at, right? Because the algorithm is based off of time first, time, then price. Okay. So now, 6 a.m., we formed a high near the prior day's high, right? And before we go into 7 o'clock, right, you see here, this right here was the lowest low that we formed right there. I'm going to thicken these up so we can pay attention to them. All right. Thickening these up so we can pay attention to the one while I'm moving them around. All right. Let's do this right here. All right. Let me do this. Okay. So we set a low, we set a high, right? And then as we went into 7 o'clock, right? As we went into 7 o'clock, what did price do? Price engaged with the sell side that we created after 6, right? Once we let price establish a dealing range, right? We traded above these highs. What do? We created a new liquidity pool. We traded below these lows. What do? We created a new liquidity pool. So price has established a dealing range per the 2024 mentorship for this specific time-based, let it establish a range. What do we want to see price do once the range is established? We want to see it do what? What do we want to see it do? What do we want to see it do?
Engage liquidity.
What?
One way or
Yes.
another.
Yes, we want to see it engage one side of the liquidity. So here, after the 7:30 kill zone open right here, right? We engage the sell side. Once we engage that sell side, right? What do? I'm gonna move. Let's do this right here. I'm gonna copy this. This is there's the new sell side, and I'm gonna turn this one into a dash because we engaged it. We have ripped him to shreds. And I'm gonna, hold on. We're gonna make it dots. We've ripped it to shreds, right? So once we engage that sell side, okay, we watch it engage one side of the liquidity. What do we want to see it do next? Once it engages one side of the liquidity, what do we want to see it do next?
Give us signatures that it's going to attack the other side of the liquidity.
Yes. You want that's the way that we trade it in the gang. But according to, you're very correct. But according to Michael, what do you want to see happen before you even look for a reason to engage? Create relative equal highs or lows it can be correct, but above creating the relative equal highs and equal lows, when it's going, if it does go to create the relative equal highs and equal lows, what is it going to do? This is the thing you want to see it do. If it goes up there, you want to see it do what? Yolanda said, see if he wants to cut all of that out and then just finish that statement. You want to see it. Come on. Take away the see if it wants to. She said you want to see if it sets up to want to. Take all of that off and you want to see it.
Engage the liquidity.
Engage the opposite liquidity, right? So it takes out the low, right? And then it goes up and it engages the buy side, right? It engages the buy side. Now the buy side, why is this not thick? Thick. Copy. This has been engaged. Dots. Now we've swept the sell side. We've swept the buy side. And now that we've done this, Now we're looking to see if it gives us a setup to go back to the sell side. Or if it did it in the reverse, you would be looking for a setup to see if it went back to the buy side. We'll get to that one in a minute, right? But we took the sell side, we took the buy side, and then we came back and we got a bearish break-in market structure right here. Once we got that bearish break and coming into 930, right? So let's go back here and coming into 930, right there. That's the 930 open there. Let me bring it to the screen so you can see it. Right. So coming into the 930 open here, now that we've come into the 930 open, we have a new liquidity pool here, and we got a new liquidity pool there. And we have engaged both sides of the liquidity, right? We've engaged now for back up for a second, right? So if you was watching, or if you trade pre-market, right? Or if you trade, if you trade pre-market, like Yolanda said, it attacked the sell side and then it gave you a signature to go back and engage the buy side. This right here could be a long setup off of fair value gaps or inversion fair value gaps or whatever you trade over here, right? That's a long setup going back to the opposing liquidity, right? That's the way, you know what I'm saying, we trade it, right? We see the engagement, we look for the signature to go the opposite way, and you execute. Okay, now, based off what Michael teaches, we've engaged the sell side, we've engaged the buy side, and now we have a bearish break-in market structure. Boom, here's your fair value gap short, back down, and we eventually got down to the sell side, right? Engage the sell side, engage the buy side, right? Set up a new dealing range after forming a new dealing range, right? So now, once you let it form the range, now you see the algorithm is working. You know what I'm saying? It's created a new dealing range. So now this is the dealing range that you know I can trade inside of here, right? It formed a dealing range here, and then it created a new dealing range. So now you know, based off the principles, I can trade inside this dealing range and make a living. Okay. That's not how Michael explains it. That's how it makes sense in little Timmy Rogers' head. Okay. Now, so you see here, and now Mama said we're gonna get back to that in a minute, right? Because remember here, we let it establish this dealing range, and we engage the sell side, and Yolanda said we want to see it give you a signature if it wants to engage the opposite side. Now let's fast forward over here to once we create this dealing range, right? Now this is after we've engaged the sell side, engaged the buy side, right? And now we're trading inside this dealing range here, right? We haven't attacked either side yet. But since we've done this and this, we're now looking for a reason to go there. Why are we looking for a reason to go there? Because we attack sell side, attack buy side, and then had a bearish break-in market structure. That bearish break-in market structure is giving us a reason to come here, right? So now, boom, when we engage the sell side, right? Now we're looking for a reason to see if we want to continue or if price wants to give us a signature of going back to the buy side. All right. And after a very ugly accumulation and a heavy manipulation here, right? This is our time distortion, right? Time distortion. If we scribble all of this out right here, right? Time distortion. We attack the sell side of our range, right? We got a bullish break-in market structure, and then we traded all the way back down to the last down close candle of the bullish order block, leaving the low. A very deep manipulating retracement to drop all the way back down below the sell side, right? Below the sell side here again, right? Without taking out the new low that was created, right? Showing that it's still a protected low, right? So a very deep, and I'm just chalking this right here up to just manipulation, NFP manipulation, right? Because algorithmically, after we got this blast off up here, right, a retracement back, the farthest, we needed to come back was maybe to the breaker, maybe into the fair value gap. That would have been a very deep retracement, but we came all the way back down, right? The wick came all the way down below this low here, right? Took out these lows right here, but it didn't came all the way into the rejection block here, right? Very, very deep manipulating retracement. But once we did that, we expanded up, right? Got a break in market structure, retrace back down into the fair value gap, into the inversion fair value gap, bodies of the candles respecting both of them nicely, right? We blast off again, right? Trading all the way up, taking out that buy side liquidity there, right? Traded down, spiked up one more time, dropped back down once again below the 930 open, right? Getting ready to go into the 950 to 1010 macro. Once the 950 to 1010 macro hit, we are here. This is where the 950 to 1010 macro hit. We're already in an imbalance. We're already in some short-term sell side, right? Prices in a buy program. So instead of dropping down to this sell side, dropping down to this liquidity, price just took off and came up to the liquidity and eventually trade into the opposite side of the dealing range, right? Engage one side, give a signature that it wants to attack the other side, right? Retrace back in, see, give a signature, want to attack the other side, retrace back in and move its way back up, right? Because matter of fact, if we just took out all of this price action right here and connected this drop straight over here, right? It would have just been a drop below sell side, expansion up here, then a retrace back down, right? We trading, cut all this out, drop below sell side, trace up, breaking market structure, trade down, boop, trade down, boop, just like that. And like I say, even though it was very ugly, right? It was very ugly throughout the morning session, right? It still showed that even in the midst of manipulation, because you can't plan that right there. You can't plan that deep retracement for no reason. NFP weak, right? You can't plan on that. That's how people get taken out, shaken out, and make you think, oh, that this concepts don't work. All right. Then after taking out the opposite end, the buy side, right? After taking out the opposite end, the buy side, right? Move this here. Copy this. Move that there. Take them out. Here. Those look smaller. Right. So after price came up and took out that buy side, right? Remember, we had generated a new liquidity pool up here. We had generated a new liquidity pool down here, right? And then after we traded back up into the buy side, on the top end, well, the buy side. After we traded back up and engaged the buy side, we hung out here accumulating, right? And then right over here during the 1150 to 1010 macro, we traded up, took out short-term sell buy side, creating a high. Then we dropped down, bearish breaking market structure there, retrace back up into a small SIBI at 1209 right there. And then we dropped it like it's hot, drop down, set relative equal lows, retrace back up into the range, right here. Set there, consolidated a little bit right there. What do we anticipate whenever we go into any type of accumulation or distribution consolidation? We anticipate some manipulation. What do? We traded above the high right there, and then we drop down, taking out the low. What kind of distribution do we call that right there? What price engine model is that? When we consolidate, take out the buy side, then drop down, taking out the sell side. What kind of price engine model is that? What price engine model is that?
Is that a Judas?
No, what price engine model? Price engine model.
Accumulation.
Price engine model.
Oh, CER.
No. Price engine model.
Man.
I'll take a stab at an AMD.
No.
No.
The make money model.
Price engine models. It's two of them. It's two price engine models. One is
reaccumulation.
Offset accumulation and reaccumulation.
But this is an accumulation. This is distribution. We're on the sell model. Distribution is on the right side of a sell model. So that's what?
Offset distribution.
Offset distribution. Yes. The price engine model of offset is when you take out the opposing liquidity before continuing. The price engine model of re is when you just expand and retrace back to an area of fair value, right? So if you're on the left, right side of a sell model and you go in there and start accumulating or consolidating or whatever you want to call it, this is an area of distribution, right? I like to say re when you're on the right side, right? So you come to this area of distribution when you start accumulating longs and shorts. The price engine model that takes out the buy side first and then goes down, that's offset distribution. Boop. It gives you the Judas swing. It gives you a bearish Judas swing in this case here. So that's the price engine model of offset distribution, right? We come down, take out the relative equal lows, right? Well, we take out that low there. We don't actually take out all of them, but we take out that low. Then we retrace back in to the lower SIBI, leaving the breakaway gap, and then we drop it like it's hot. Eventually coming all the way back down and engaging the sell side. Now, once we engage the sell side, right, we do not give a signature of wanting to go back to the buy side, right? We give a signature of wanting to continue down. The sell program stays intact, right? The sell program stays intact this time. We've created a new liquidity pool. Remember, we started here, made a new liquidity pool, took it out, new liquidity pool, took it out, new liquidity pool, came up here, took it out, new liquidity pool. So once we came up here, right? Once we came up here and created that new liquidity pool there, right? This is our new liquidity pool here, right? Once we came down here and attacked this, right? Attack this low, right? There. So now We've attacked that low, and we've created a new liquidity pool there. All right, got a new liquidity pool there. What do? We are in a sell program, and we come down and we trade back up, but we're not giving a signature that we want to continue going up, right? Well, Tim, how can you say that? Right? Let's go in and look at it a wee bit closer. Right? So when we come, right, when we come here, we drop in here, we displacing, right? So once we get here, right, we just kind of have overlapping candles coming down when we engage the sell side there. Just overlapping candles, not showing that we want to like really take off and continue down, right? But when we come here and drop here, right, we start creating fair value gaps, right, coming down in this direction, right, showing, okay, we may have a desire to want to continue going down. All right, now that's not just it. Okay, let's go back and put some more lippity lipstick on the charts. See here, what's this? Look at what I'm turning on here. That's that from up there. Nice inversion fair value gap on the short down there. Okay, yep, we'll leave that there. Sell side, buy side, there. Okay, yeah, we'll leave him on there. Buy side, sell side. Okay, we already got those other ones marked down on there. So now, so Tim, what did you just turn on? Oh, just some little key points, key levels. All right. So we stretch that out. Stretch that out there. Okay. So now, come here. Right. So coming here, right here, price here, right? Once we came down, we started to displace down here, right? And then once we started coming back up here on this 1 minute time frame, right? And we can look over, we'll look at the higher time frame in a second, right? But on this 1 minute time frame, as we started coming back up, right? As we started coming back up, price never gave outside of this retracement right here, right? This little pullback here, right? And we didn't even come into the fair value gap there, but we came into that fair value gap. Outside of that little pullback right there, that high there, which was before the break in market structure, right? It was before the break in market structure, right? Price never gave smart money an opportunity to participate in a long after taking out this sell side, right? True, smart money will get long below the low, but it will give an opportunity to enter long off of retracement, right? So it never gave an opportunity to get long after we got our break in market structure, after we got our change in the state of delivery. So we got a change in the state of delivery, got a break in market structure, and never got any type of retracement, right? Once we came back here to above the new day opening gap. We did pull back down into this fair value gap, right? But then what did we do? We were just coming back to the premium PD arrays, right? This SIBI there and this SIBI here. We came back up to this reclaimed fair value gap right there, which was in the premium of this move, right? It's all it did was come back to a premium too short, right? As I said, never gave a signature that it wanted to go back up, right? We started to displace down, right? Took out sell side, right? And then we went up, taking out buy side, right? Came all the way back up to a premium, right? Offering smart money an opportunity to short in a rich premium where at some ambiguous level, nope, a reclaimed bearish fair value gap, right? Traded into a current bearish fair value gap. Okay. And then drop it like it's hot. All right. And then I think we had some other confluence there. Let me see. Just in case. You know what I did? I think I deleted my Fibonacci tools. So let's go there. I want to say it was some other confluence that I was watching around there too, if I'm not mistaken. But I deleted my Fibonacci tools. If I come here to my daily chart, my daily, yes, it's my daily SIBI. Is it my daily SIBI? I think it was. You know, 4 hours. This here. All right. So I was looking at that on the 4 hour there. Okay, now let's go back to the 1 minute. Okay, so now coming back in, yep, a Rooney. So I know it's difficult to see because there's a lot going on. So I will move all of these dotted lines. We don't need them anymore. Right. Removing the dotted lines. Get out of here, dotted lines. I don't need that. Now, the only lines that are dotted on the screen now are from the daily SIBI. All right. As you see, we came back to consequent encroachment of the daily SIBI. What's resting at consequent encroachment of the daily SIBI? This 15-minute SIBI. Once that created, let's go here. Right here at 9:30 a.m. Right. So at 9:30 a.m., we created a SIBI, right? At 8:45 a.m., we created a BISI, that SIBI, that BISI, right? We have a balanced price range right here. Where is it located? Right there at equilibrium of the daily SIBI that was above price that we was anticipating price to go up into, right? We repriced all the way to the top of it this morning. I think it was this morning. And then we came back down and then we created a 15-minute SIBI at 9:30. Right. So at 9:30, we created a 15-minute SIBI. And then later on this afternoon, after engaging with the sell side, right, and creating a new liquidity pool, we did not give a signature that we wanted to go back up to the top. Only thing we gave was we are retracing back. So we're looking at this bearish dealing range. This is our bearish dealing range here. This is the last expansion leg of that dealing range here, right? So looking at the last expansion leg of that dealing range, right? And we go to equilibrium, equilibrium there, right? What do we have in the premium where there is a heavy amount of confluence? We have a we have a SIBI here at 1245. We have a reclaimed SIBI here from 9:30 this morning, and we have consequent encroachment of the daily fair value gap right here. All of them in line, right? So watching this and also keeping aware that the first presentation is just above it, but this is where that heavy confluence is, and price gets there and we start to engineer liquidity, start to hover. We're just hovering, right? And as we're sitting there just consolidating, right, what do? We drop down, take out the short-term sell side, create a SIBI, right? Trade back up into the SIBI there, right? Getting ready to go into the 150 to 210 macro, right? As we come down, the macro starts here, right? The macro starts there. We've already traded up into an imbalance, right? So when the macro starts, price just makes its way down, starts to drop, starts to spool all the way over here. And then the macro time ends right there, down here below that short-term sell side there, right? Consolidate a little bit and then drop down into the sell side, right? Creating a new liquidity pool, right? And then again, what do we get here? Price, after we create a new liquidity pool here, right? Created a new liquidity pool here, right? What did price do, right? We expand down, right, with some displacement. Then when we start coming back up, right, we're coming back up. We get our breaking market structure right there, but price never trades back down. Who raised their hand? Price never trades back down, given an opportunity, saying that it wants to go back up to the buy side, right? When we retrace back up to where? The lower quadrant of the daily SIBI, right? Trade back up to the lower quadrant of the daily SIBI. Once we hit that lower quadrant, we drop down, get a break in market structure, taking out the sell side, right? Trade back up into the range, sit here hovering for a while, right? Poke below the sell side again, right? Poke up above the buy side, tripping in people that want to break out, right? Tripping in people that want to break out, come down, punish them, take their stops, right? Retrace back into the imbalance, then drop down, boom, taking out the sell side again, trading down to consequent encroachment of that 4-hour fair value gap that I had annotated with the Fibonacci tool. I deleted it when I first came in. I like, God dog it, I deleted my fibs, but down into that 4-hour fair value gap. Why did I have that marked out? Because you always want to know when you drop down below the sell side, which was moved down to here at this time. Whenever you always want to know if you drop below the sell side, how far can you go, right? So when we're looking back over here below this sell side, we're looking over here. Yes, there's sell side over there, right there, but on the higher time frame, right, there's an imbalance here. On the 4-hour time frame, there's an imbalance there, right? So that's why I had that marked out. And we drop down to consequent encroachment of that 4-hour imbalance, right? And then once we hit that 4-hour imbalance, right, price comes back up, makes its way all the way back up, going toward the end of the day, right? And it closes out the day at 4 o'clock right here around the low. right? So we're offsetting, distributing. I said offset. We're distributing positions down here, right? And we just close out the day right here, right around the low. And then after hours, after 4 o'clock, we slowly start to trade down and finished off the day down here by engineering relative equal lows in after hours from 4 up until 5. And that is your intraday price action recap. A recap. I saw somebody had raised their hand. It said somebody raised their hand. Who raised their hand? Oh, that's me. You said, when did I put my hand up? It said I raised my hand. It said that I raised my hand. All right. That's all I got, man. Anybody got anything for me? All right. I'll take the silence as a no. It's 6:56, 6:57. I do. You do what? You do what? If you were trading futures, would you let it pull all the way back to see if it would form signatures showing if you wanted to continue or reverse, or would you exit at the lows prior to retracement? You talk about if I'm in a what help me out. You're saying if I'm in a position, will I let it retrace against me? Is that what you ask? Is that what you asking? If I'm in a position, would I let I say if you were trading futures, would you let it pull all the way back to see? What do you mean if I'm trading futures? I am trading futures. Right. Let me see if my reading. If you were trading futures, would you let it like people hold when trading options? Well, options and futures. Okay. The short answer is it's all about your time horizon. How long are you looking to be in the trade? And how volatile is your asset? Meaning, how large are the swings? How large are the moves? All right. Okay. If I'm a scalper who just shoots for 10 to 15 points, right? I do not trade futures. I'm curious if you would hold since you said, so I'm curious if you hold since you said it did not show signatures of going back up. Okay, so I'm trying to understand what you're asking, but if if I'm if I'm short from here, if I got short here, right, when we got this breaking structure and I got short here, right? So if I'm short from here, right, if I'm short from there, right, and let's just say my my target is here. Right. That's my target based off of, this model here. and I'm anticipating price to come back to there. I'm just picking a low right now. If I'm short from here and this is my target, right? Once price dropped here, boop, took out this low, right? Then traded up and dropped here, boop, there. Now, I have trailed my stop here, so I would let it retrace back here to continue down to my target, right? If I'm short from here and this is my target. So yes, I would, once it get here, I would hold my position to let it retrace and then come back down to what my target, because my trade idea is to there, right? So if I'm sure, if I'm in a setup like that, yes, I'm holding through all these little signatures there. Now, if I'm just intraday scalping where I'm not in a position and I'm watching price action, right? I'm not in a position and I'm watching price action and I'm still looking for signatures, right? Now I see here that we came down and we took out sell side. We retraced back up to a premium, right? And then we continued down, taking out sell side again. So now I see we're in a sell program and the sell program is holding. We took out sell side, we took out sell side, we took out sell side. The sell program is holding, right? We're not retracing back and forth anymore. So once we come here, took out sell side, went back. And once we came down here and took out sell side, now I'm looking for a reason to get short, right? I'm looking for a reason to get short. So now I'm watching, right? I see here we kind of do back and forth, right? We're getting these small little retracements, right? So now I'm watching the entire dealing range here because we're not getting good, which is quick little pops, right? So I'm watching this to see where can I get short in the premium, right? Where can I get short in the premium? Look for a reason to get short in the premium. Okay. And we come back up here. I have no good PD array outside of the quadrant of the daily fair value gap. We never make it to the new day opening gap, right? There's nothing up here that's really giving me a warm and fuzzy of wanting to go short. So when the algorithm gets here and starts to consolidate, I'm happy now because now it's pausing to let me look for a setup. So I'm in nothing here. I'm waiting for the setup. So when I get the drop and the retrace, I'm going here, retracing right back there at fair value, right? At equilibrium, at a bearish fair value gap to come down and engage the sell side. So, right, when you're not in a position and you're watching signatures, you're looking for the fact that, hey, we're not going back down. We're not going up. We're not reversing. It's not giving me reversal signatures. It's just giving me regular order flow. Order flow is still intact. But if you're in a position right now, you say, oh, I don't have, my stop is safe. I don't have to worry about it. It's just giving me regular order flow. That high should be safe based off of what the algorithm is doing. I can shave some off here and trail my stop there, right? Once it come down here, shave a little bit. Once we retrace back up and we drop down there, now I can trail my stop because now I know that high is safe, right? But you're managing the trade as opposed to trying to get into a trade, but you're looking at the same signatures. Any other questions? Hopefully that helped. Hopefully it made sense to you. Any other questions for me? Yeah. Nothing. All right. Take that silence as a no. Go ahead and update my you're welcome. Go ahead and update my chart real quick. But that's all I got, man. I appreciate y'all for hanging out with. I guess I could do this the fast way by just going ahead and deleting this stuff. Delete. Right. I appreciate y'all for hanging out with me, man. We got a bearish new day opening gap over there. What somebody said? Oh,
Hey,
you
speaking of the Bears, knew they opened the gap, Tim.
yes.
Um, this is a simple question about the open, high, low, and close of that next green candle. I just need to know what is the green candle open at the top of the candle or the bottom of the candle,
Bottom of
or
the
at the
body.
bottom of the wick, the
Bottom of the
bottom of the
body.
body. Okay, so open at the bottom of the body, went down, then went up and came down a little bit and closed.
What? You up? No. Okay. So which up? We talk right here.
Yeah, the first one.
Oh, okay. Yeah. So it don't have no bottom weight. Yeah.
Oh, I'm looking at what you on? I was on the 1 minute. I
It
was
was
on
1 minute. It was 1 minute.
it's we on different what does this say? This says S&P 500 E-minutes future one.
Yes. NQ. What you on the NQ?
Uh,
What you on the NQ?
I am now.
What was you on before the ES?
Yeah.
Oh, you was on the ES.
Yeah, it had a down. It had a okay, forget that counter. Let's go to the next one. Next to that one.
That.
Yeah, what that
So
one opened at the bottom of the body
yes.
and went down first and then went up. Made the
Maybe.
top wick, then came down and closed.
No, more than likely it opened, went down, went up, and then closed. Most
That's
likely.
what I said.
Yeah, I'm saying most likely, but it can open, go up, go down, come back up, and
Oh,
close.
okay,
It's
okay,
like,
okay.
you know
I
what I'm
can get
saying? Yeah,
yeah,
it most likely you like when you see a green candle, you
yeah,
automatically just want to assume we opened, went down, went up, and then closed
yeah.
off the high because we
Right,
think in the mind of the power of three. But
yeah.
it could do anything. That's just showing you
Right,
where it
right.
opened with the lowest, the highest, and the close, right?
Okay. All right, I'm good.
Yeah. So, and the reason why I always tell people to get into the habit of saying up close and down close is because you can change the colors of these, right? You can change the colors of these candles
Yeah.
and you know what I'm saying, like the bodies of the candles. Let's say I want my green candles to be black, right? I can make my green candles black and I can make my red candles blue, right? And then I could change the borders, right, to match it. Right. It's gonna be black. Right. I can change my borders to match it. And then the wicks, black, wicks, blue. Right. So now, you see what I'm saying? Like, that's why I tell people to think about it
Yeah, I
as
feel you.
up
Yeah.
close and down close, right? Because right now, looking at this right here, right, you're like, okay, what colors, what this candle saying,
Yeah, yeah,
what
yeah,
that candle did. You see
yeah.
what I'm saying? Because we've been ingrained to see the green as bullish, the red as bearish, but you can change the colors on these charts. And if you change the color on the charts, then you like, okay, all right, this is an up close candle, it's a down close candle. You know what I'm saying? This candle. And like with the bars, it like the bars are harder to see, but there's no confusion when it comes to get out the way. There's no confusion when it comes to bars, right? Because the open is always on the left and the close is always
Oh,
on the
okay.
right.
Yeah,
You see what
yeah.
I'm saying? So you can always see that as up close bar, right? It open and it close. It open up close. Why? Because the close is above the open, right? It open, it closed down. Open, it closed down, right? The up close and down close. No matter what color you make them, right? No matter what color you make these, you still know the
Yeah, that looks strange to me. I'm used to looking
yeah,
at the candles.
yeah.
That looks strange right
Right.
there.
So if I make that the down close um black and the up close blue or vice versa, the up close black and the down close blue, right? I still know it's a up close because it
Yeah,
open
because the
and
thing is on the
close,
right side.
open,
Okay,
close,
yeah.
open, close, open, close, right?
Open on the left, close on the right.
Yeah.
Okay.
Mm-hmm. Give you the same information, but it's just instead of bars, these are Japanese candlesticks, and then the other ones are price bars or whatever you call them, whatever kind of bars it is. Right?
That's why I like them. I like sushi, Lexus, Japanese,
Boy, stop.
hibachi.
Is Lexus a Japanese company?
Yes, sir.
Oh yeah. Wait, who is it? Toyota that make Lexus?
Yeah.
Yeah, okay. Yeah, that's right. Cause I remember when I had got that we bought that Toyota Solara. It was it was like a Toyota frame, and the inside was like they took the inside of a Lexus and put it on a Toyota frame. Like they took the style from the Lexus line and put
Yeah,
it
from that
on.
a little sports coupe, the
Yeah,
SC.
and that's when they first made the Solara, and and so matter of fact, when we bought it, that's when they was making them two-tone. And when we took it back for some repairs a few years later, we took it back for something with the paint. That's what it was. It was something with the paint. And they gonna tell us they couldn't do nothing with it because it was an aftermarket paint. I said, man, we bought this like this. What you talking about? And they were like, we never had two-tone. It was like people who had just, I said, man, I bought this from the same lot, just like this. And they had to tell them like, oh yeah, when we first launched them, we were doing like the two because it was red with gray on the bottom. Like, man, I bought this off this lot just like this. You talk about y'all ain't do this here. It's y'all faulty paint y'all put on here.
That's 2000.
It was
Oh one, a Solar.
yeah,
That's
it was
throwback.
it was 2000. It was either 2000 or 01. Because I came back from Germany 1999, and then I bought the Solara out of Savannah when I was still stationed in Hinesville. I was still living in the house because I moved out of the house in 2001, so it had to be like 2000. Yeah, it was 2000 because I moved out of the house and moved over there on Slade Street. No, I lived on Slade Street in the house. Then I moved over there to the townhouse, and we got the Solar when I was in the house. Yep. So 2000 throwback. Throwback. It was a bunch of folk, just wee bit of shrimps back in them days, man. Some of these boys was at in the third and fourth grade in 2000.
For real though. For real, man.
Third and fourth grade in 2000, man. Get behind my low. Day high, day low. Pete. Put that on Pete. Man, what a low at? That's the weekly low I turned on. Turn the daily low. Drop. Big bass drop. Daily low, daily high. Midnight. I need midnight. Midnight. Don't really need to show these.
Look like you put that line in the middle of nowhere. What's that line?
That was one of my new day opening gaps. Talk about this here. Oh, you know,
Let's say midnight.
Oh yeah, I just put it on 12 o'clock.
Oh, okay.
Yeah, I don't know where it's gonna open up at, so I just slide it over there and put it on 12 o'clock.
Oh, okay.
I just put it near. I just put wherever price be trading. I just put it somewhere near there at 12 o'clock. Cause if it just consolidate all night, I ain't got to be coming up here looking for the line to pull it down.
Okay.
You know what I'm saying? So I just put it like right near where it be trading. So when I wake up in the morning, hopefully it just be inside the price, and I can just grab it and just put it on the midnight candle. Sometimes if you done trade it way away and I got to get it and drag it way up there, but I just always try to put it like kind of near where we trading at when I update my chart. And that way, you know, at 12 o'clock, I could just anchor it to where it needs to go.
Hey, why you don't do none of those live trading? Like the other people be doing live trading.
God, there too many people pocket watching out here. Too many people pocket watching. And
No, I'm saying you don't have to do, you know, you can just, I guess, use one of them other accounts.
Too many people pocket watching out here. And then the thing of it is, right? Not only the pocket watchers, right? Because because at the end of the day, I could care less if people think I know how to trade. I don't care,
Yeah.
right? But one, I don't need you pocket watching me to try to figure out how much money I'm making. Cause if you see me trading, everybody know how much the NQ paid. So if you see me make a trade and you be like, okay, he entered here, got out there.
Oh, okay.
Man, that was a 50-point trade. NQ, that's $1,000 off that one trade. You know what I'm saying? Then now you pocket watching me trying to see how much money I'm making. Not only that, but then it's people who come out here on the internet just to copy people trades.
Yeah.
You know what I'm saying? They come out here just to copy people trades. And like shout out the little homie Tremaine out of Texas, right? This man, like people sign up for his Discord, and he tell you all the time, this is not a call out service. This is not a trade room where you're supposed to be copying me. You just, you know what I'm saying? You just in here watching me trade to understand how I engage with price, how I work out my discipline, how I work on my risk management. You just in here watching to see these things. You're not trying to copy my trades. And like on days when he don't trade, man, that man be getting all kind of negative reviews on his box. Man, this man ain't took a trade in 4 days, man. This is sorry as Discord. What you mad because he ain't took a trade for? You know what I'm saying? Like, man, plus people just be out here trying to copy trade. And then if they copy trade and then lose, now they mad. What you mad at me for? Yeah. You know what I'm saying? I lost just like you. You copied my trade. I lost. You know what I'm saying?
But you do have people that charge people to come watch them copy. I mean, to pay to come copy or whatever.
Yeah, you got people who actually they run call out services like, hey, come in here and copy my trades. And that's what they think. They think everybody do that. Everybody don't do that. Everybody don't do call out services. You know what I'm saying? And then you got the people who they mad because the people that's running the call out service using demo. They using demo. Now you're not mad when they win it, right? And when you win it, you ain't mad. But when you're losing, he ain't risking no money. He wasn't risking money when you was winning. So now you know what I'm saying? Now that I'm losing, it's a problem. I ain't risking no money.
Okay. So the just say the teacher or whatever, they're not using real money. Yeah. But the people that's following their trades using real money. So the teacher winning all the time, long as they pay.
Yeah.
Oh, okay.
And so a lot of people get mad because they he ain't risking no money. So it's easy for him to say what's going to happen because he ain't risking real money. Do the concepts work? If what they telling you work, what make a difference if you're using demo or not using demo? It works. You know what I'm saying? If you just
want somebody to blame.
Man, people want somebody to blame. People want some, and then you have people like Michael. He don't charge nobody for nothing. And everybody he's just doing that in demo. Do the concept. This man ain't charging nobody. He just sharing what he do it in a live account. Let me see you live. You just want to copy this man. That's why everybody be like, why can't you trade live? Because you just want to copy the man. Man, do you know this? Don't you know this man will break the internet if he live streamed his trades? He will break the internet. This man be having 60,000 people watching and listening to him while he talking about the charts. This man will break the end. If a person see him saying, I'm getting in short right here, 50,000 people from the get in short at the same spot. That man will be
and they putting way more than they usually do.
15 contracts. 15 14 contract, full port. Man, that man will break the internet. Why? Because everybody know his stuff work. Everybody see what he do. So everybody waiting to engage and do what he doing.
What's the percentage on his stuff working?
Man.
Did he give out a percentage or whatever?
Nah,
Or
he never
did you figure out some type of percentage?
I ain't never figured out no percentage, but ever since I've been following him, right? I saw him take 3 losing trades in a row. And I personally think he did it on purpose because the trades that he was taking, I was like, why is he taking that? I think he did it on purpose just to get the trolls talking, right?
Yeah.
I saw him take 3 losing trades in a row on a live stream, right? And I think he did it on purpose to get the trolls talking. But besides them 3 losing trades in a row over the last 4 years since I've been following him, right? Outside of losing on purpose, right? I've seen him actually share like 5 losing trades, maybe.
Mm-hmm.
You know what I'm saying? Over like the last 4 years that he shared. And then back in 2021, I think it was, he shared his brokerage statement of everything that he had been trading and telling us about that he was doing. He shared his brokerage statement, opened it up, and now he had a few losing trades in the beginning, but he went in there and he deliberately lost because the people like, how do you get out of drawdown? And he deliberately went in and just buy, sell, and put himself into drawdown. He lost like $1,000 or something like that. He put himself into drawdown and then showed how to recover,
how to get back.
Yeah. So those losses right there, I wasn't even really counting those,
that.
but
Yeah.
he had like a few losses in there that was outside of that loss in the beginning. He had like a few losses in there, but if I was to just sit down and honestly say, that man got to be above 90% strike rate.
Yeah, I was gonna say 80. I was gonna say he had 80. Cause boy, 80 is wonderful.
Man,
for
that
me.
man, I'm telling you, this man, he got to be. He got, just from following him and looking at what he and like, cause right now, I know he finna shock the world. I know he finna shock the world because they done pissed him off, and he has been trading his live account this whole year. He been trading his live account. He's finna shock the world because he been trading his live account, and whenever I poke my head out on Twitter and be looking at what he posting, man, I done seen where this man done made over $27,000 in one day with just like 2 trades.
Yeah.
You know what I'm saying? He got the video showing he made $16,000 going short and $10,000, $11,000 going long in the same day. You know what I'm saying? And I done seen him do this over and over and over. And I know he finna shock the world come the end of the year when he stopped trading. And because he already said he gonna share his broker statement again, just like he did back in 2021. He finna shock the world because everybody talk about he can't trade live money. Man, this man. And then somebody said something. I looked on Twitter today. Somebody said something like about why you can't do it live. He said, I made more today than you did in your whole life. He said, why you can't trade live? That's why I love it. That's why, man, he's so petty. He is so, what did I type? He is so petty. He said, man, I made more today than you did in your whole life.
How long he been trading?
30 years.
Oh man.
Over 30 years. This man is multi-millionaire, man. He is a multi-millionaire. This dude, he bought a $2.5 million house cash. He bought it cash money. He put it all, and people like, why are you letting people know where you live? He said, I got something to keep you away from here. If you come knock on this door if you want to. Okay. He said, come knock on this door if you want to. What PDub? I think it's this side here. Homework. How many All right here. Homework assignment. Go trade live. Honey, I made more today than your whole life. I must say I made more today than your whole life. And he was in there today. I can see he was in there today trading up and down. Cause he posted this right here. He'll like homework assignment, what PD arrays was used in these swings, right? And you can see he was in here just like trading up and down inside this right here. Right. Matter of fact, this is the same daily fair value you got right there. Right. He was just trading. He was going up, down.
I see.
Right, down. He just trading.
I would trade anytime he get ready.
Yeah, 3 contracts, 6 contracts, 9 contracts. You know what I'm saying? Trading up and down all day long. You know what I'm saying? Hitting crazy licks. Got all kind of he be sharing all kind of trades, man. This man from the shock the world. Here go one right here. This one right here that he did here.
But he pre-recorded this stuff and then show it later, right?
No, this when he in the trade, he on his phone right here showing the trade right here. Like he's showing the trade while he in the trade here, right? Just talking through what he doing while he in the trade. And then you can see right there, what he making there. Right? Right now he in the trade, he up 7,500 right now.
It could trade right up into the volume.
And then when you get over here, right? And then because he had to stop
sweeping that.
See, he'll like I'm going.
We'll look for.
He did this right here.
Bread and butter, and I want to go back.
Can you hear him talking?
Yeah, I can.
Okay.
So just for the sake of bread and butter, and I want to go back to sleep, and I won't have to babysit them. Look for.
What say bread and butter? Then he going back to sleep with 10,000. What do you mean 10,000?
Right. And this
lunch money, a little lunch money.
Yeah, he said lunch money. Right. So
50% level there. You can see it's not market.
And then he's showing you it's live market. You know what I'm saying?
And there it is, folks.
10,000.
ICT does it again.
Yeah, and he posted that. And he posted that this morning. He posted that that's 14 hours ago. Yeah, so that was like during the London. He traded that during the London. So that's 10,000 that he was trading during the London. And then he came back later during the New York and was trading all this right here. Right? Because this today's price action right there. He came back and traded all that right there during the New York. You know, that's the drop down that we was just talking about right here. That little move down like that right there.
That boy is trading all day long.
I tell you, he getting ready to shock the world, man. I'll tell you, he gonna call people telling him because he was like he was gonna beat his mentor's record during the little competition that they be doing.
Who was his mentor?
Robert, some cat from back in the day. I can't think his name, but he talk about him all the time.
But he was a super genius trading like
he was just like he was like one of the biggest traders like back in the day. Like he made this crazy percentage during the Robbins Cup. You know what I'm saying?
Jordan Beckford.
Larry Williams.
Larry Williams, that's his name.
I thought it was Jordan from the Wolf of Wall Street.
Oh no. Nah.
Jordan made that cash, boy.
Jordan was crazy. But yeah, so he, you know what I'm saying, he was like he was gonna break his record, right? And then he joined the Robbins, and then the people who was supposed to join with him, they didn't join. So he just blew the account. He said he blew the account on purpose. And then so people was trolling him saying, you got these excuses for not winning the Robbins. You know what I'm saying? So now that's why I say he finna shock the world with what he's showing, with what he did in his
sick of the haters. Account. He's just sick of the haters.
Man, this is what he do. This man is a master marketer. And now it's one of the things where now he just doing it just to poke the bell, because he don't have no mentorship. He ain't getting paid through nothing besides YouTube ad revenue. That's it. He you know what I'm saying? He just get paid and trading. He ain't got no mentorship. He don't sell no courses. He put everything out for free. You know what I'm saying? He outside of trade.
Where he from?
Maryland. He from Maryland. Yeah, born and raised in Maryland. He say that boy say he come from a place called Pallet Town. That man say he was so po trailer park trash used to talk about how po he was.
It's payback time now.
And pay. That's what he said when he was in his 20s. Man, you couldn't tell him he was so arrogant and cocky because he was making so much money. You couldn't tell him nothing. He said he was the biggest jerk you ever want to meet.
But at least he knew. He keeping it real. He been honest.
Hey man, I ain't mad at you, man. Talk
He
your talk, man.
neither.
Man, if I man, I'm telling you, man, and I feel like I'm good at this. I feel like I'm good at this, man. And man, the stuff I see this man do, I'll be like, how did he know that? Like, how in the world
30
did he
years,
know
man.
that?
30 years. You only 7 years in. What you, seven,
No,
6 years?
what it is, this cause people be like, he's just rebranding stuff. Man, I ain't never seen nobody can do the stuff that this man do. I don't like if they trade in their concepts, like I sit down, I watch all kind of people trade, right? I don't care what you trade. It ain't nobody who can tell me exactly where this price gonna go, exactly where it's gonna turn around, when it's gonna turn around, why it's gonna turn around. Everybody, if this bull flag do this, then we gonna do this, and let's and like when I watch people trade, I ain't got nothing against how people trade, but they get in and they don't have no specific target. They just be like kind of trailing their stop, or they be like, I'm gonna cut it there. I'm gonna cut it there. That see green, take green. You know what I'm saying? I'm just gonna cut it. This man be like, yeah, it's going here. I ain't worried about my stop. This way it's gonna go. You don't never be like, oh, see green, take green, and this way it's going.
So you saying he wrote the algorithm?
Man, this man, I don't care what nobody say.
He down with Illuminati. What's going
Man,
on?
man, Illuminati don't like him. He
Yeah, because he giving away the jewels. Yeah,
man,
he
he
giving it away for
Illuminati
free.
daddy. He Illuminati daddy. And folk be like, he didn't write the out. Man, this man can tell when it's gonna turn around and why. And based off the stuff that I learned this little nappy head joke from Fort Lauderdale, Florida, I can get on here and I can
You can
trade.
stop flossing. Your hair ain't never been that nappy, but go ahead.
Yeah, I got ended in my family.
Yeah.
You know what I'm saying?
Oh, that little nappy head, I gotta cut that short.
I got ended in my family. Boy. I might be the milkman, baby. I don't know. I might be Uncle Al's son.
Yeah, y'all won't believe that too. Be talking about that little nappy head, boy. That boy ain't never had nappy
I might be Uncle Al's son. I got to go talk to my mama. Like, why me and Uncle Al the only ones that kept all our hair? You walk around here looking like BB with that Sherman Hemsley, right? Man. Oh man, let me update my chart, man. I'm running my mind. I'm supposed to be updating my chart 1 week. That's my Sibby. We traded up to. We never came back down to that Bissy, man. I ain't got it on here. No. Oh yes, I do. Right. We never never came back down to that Bissy. Just traded away from it. We got up there. We never came back down to the inversion fair value gap. I took it off the chart because we had created, there was inversion fair value gap over here. Once we created that Bissy, I took the other one off. Never came back down to it. Like I say, we traded up above the high of the Bissy.
That's like 1 week up there? 1 week?
Okay. All right, now I got it on the background too. Like the background show you what chart it is too.
Okay, yeah.
You got the strain and look at the thing up there. Whatever be right here, it's got the NQ. It show you the instrument that I'm on there, and it show the time frame, and then it's got the name of it down there right there too. So that NQ M2025, that just means E-mini NASDAQ 100 futures June 2025, because that's E-mini NASDAQ is the NQ. M is for June, and 2025 is the year. And then when we go to September,
I ain't even gonna ask why the M for June, but let's just go.
I don't know either. Because when we go to September, it's gonna change to a U, right? So you got H is for March, M is for June, U is for September, and then Z is for December, right? Those, and it's the same thing every year. So it's gonna be once we get to Z 2025, then we're gonna go to H 2026, M 2026, U 2026, Z 2026, H 2027, M 2027 is like H M U Z. I don't know why. why those letters are they are what they are, but that's what it is. And they just rotate through them same months because they expire every quarter, right? March,
Yeah.
June,
So you got 4 letters.
September, and December. All right. Then on my day we got I thought I had a daily. I thought I had a daily. We created a daily fair value gap that I thought I drew out. Did I delete it? I must have deleted it. Yeah, because it was a daily busy that was created yesterday. Oh, you know what? I didn't draw it. I didn't draw it because when I looked at my daily chart, we had already traded down into it. That's why I ended up drawing in the 4 hour because we had already traded into that daily. And then when I dropped down to the 4 hour, we had already traded inside it. So I just drew out the 4 hour with the Fibonacci. Right. So we create that inversion. Let's see how we treat that for the rest of the week. See if that start to push us down into some type of retracement. And we can get like a retracement through the beginning of the month. Remember when we started out, I was like, I would like to see a retracement in the beginning of the month to come back down because remember we never came back down into that weekly busy, right? We never came back down, right? And I was like, I would like to see us, you know what I'm saying, on the monthly time frame, right? Get some type of retracement back down into the inversion fair value gap that we created. Right there. I'd like to see us, you know what I'm saying, retrace back down to. Let's talk about that when the month first started. Like I'd like to see us come back down and, you know what I'm saying, use that as support for like the longer term goal of coming into these highs. Like, you know what I'm saying, maybe like what's this? So we got June. This is what's this, the third quarter? Let's see. That's first, second. So July started. So it's the end of the second quarter, and July starting the third quarter. So the end of this month is going to be the end of the second quarter, right? So then come near, and then maybe start back up, and then in the third quarter, maybe take that high, or maybe even come back down. Then the third quarter make its way back up, and then the fourth quarter go take that high. You know what I'm saying? Because right now we're in the second quarter right here, right? So the end of this month is gonna be this right here was the first quarter, right there. So the first quarter we pulled back. Man, look how far we came down. That wick down there for the second quarter. That's a mean little drop there. Look at this on the continuous contract. Okay, yeah. So we went up, took out buy side, right? End of the fourth quarter, ended up on a high. First quarter, pulled back, right? Came in right there, right? Retrace back down to the wick, right? Then open up on the second quarter, dropped all the way down to the propulsion block here. Quarterly propulsion block dropped down to that second quarter. Then now we're all the way back up here. So when June ends, right? And then that's the high right there was looking at. So June come down a little bit, maybe trade down a little bit, maybe even come back up, but pull. Just say if June pull back a little bit there, right? And then after that, right, fourth quarter we go up, take out. I mean third quarter we go up there and take out that high, something like that. We'll see how it play out though. We'll see how it play out though. Yeah, so All right, so we created an inversion fair value gap there. So I put that in there and see how this is going. Open 5,500, 55, I mean 505 even. This right here close. So that's a little gap there. Yep. Little gap there. Little gap there. And on that right there, when you're marking the fair value gaps like that, if there's a volume imbalance on either side, you include the volume imbalance unless the wick, one of the wicks crosses consequent encroachment. So if the wick don't cross consequent encroachment, then you include the volume imbalance. And what I mean by that is, right, so if I take this, let's just say if this was where the volume imbalance was, right, that wick being across that midpoint right there, you wouldn't include that. Then you just, so you'll just include the bottom of the wick if it crosses. But if it don't cross, then you won't include it. Like for example, here, let's just pretend like it's a fit, like let's pretend like these wicks don't overlap, right? So you come from there, and then if you include that volume imbalance there, you see how that wick is digging past consequent encroachment, then in that case, you just come here and put it on the bottom of the wick. Right. Version of this right here. Put this currently on there. All right, so this right here, we got a gap down, and then we blast off with no wick at all. So we gap down below the low, then we trade it back up strong, right? So this right here, this right here is either super bullish or this is a strong bearish signature, right? It's either super bullish or a strong bearish signature. Why? Because we make no attempt to go down, right? We gap down and blast off immediately, right? And typically when you see something like that, you gap down and blast off, you gap up and drop, right? Once you, like how we took our blast off, if we trade back down below there, then that'll be a good short, right? Hit their blast off. Once you trade back down below that open, that's a good short. Same thing on the other side. If you gap up and drop immediately, right? When you trade back above that open, that's a good spot to go long at. You know what I'm saying? But we'll see how that play out. Because why? NFP week. There's a lot of manipulation going on. You don't know what they holding up. They little hairy little sleeves. Okay, so here, this is that that Bessie that I had marked out there earlier with the Fibonacci tool. Right, I had the Fib tool running like this here, the one I had deleted in the beginning of the video, right? So we had traded down to the lower quadrant of that on the 4 hour. And then when we opened up, we gapped all the way down, fully repricing it, right? So we've come down and fully repriced the lowest imbalance on the 4 hour time frame in this entire dealing range here. All right. This entire dealing range right there, right? We drop down, right? We drop down and oh, look at that. We came down to equilibrium. I didn't even know that today, right? Came down right there to equilibrium on that. The low on that candle is 21,503.50. And one tick away from it because it say 21,000. Look like it say 503.25. Yes, it does. 21,503.25. right there. So one tick away from equilibrium on that 4-hour candle. Right, for that entire dealing range right there. All right, so we came one tick away to that 4-hour candle right there. And then we gap down, repricing the lowest imbalance right there. So there's no other imbalances down here. I don't think there's some sell side there, right? I don't think we got there's some internal sell side right there. Okay, on this area there. All right. So let's see if price wants that sell side, or will it just be super bullish and in the bullishness just keep up? Because the only thing we've been doing is getting a slow grind up. We consolidated here, got this right here was our, what we said it was our offset when we was up here. We said this is looking like it's offset accumulation. We just looking for a retracement and expansion, right? We got our retracement and we got our expansion right there. We was talking about this the other day. We were saying we was consolidating. We took out the sell side, trading back above here, showed us that it's offset accumulation because we're anticipating this to be an area of accumulation. We got our retracement and then we delivered above the highs right there, right? Now we're looking for it to continue up to complete the market maker buy model at some point in time. Will it be next week? Will it be the week after next? Will it be, who knows, right? We've been in this market maker buy model. We got to the right side of it way back in April, right? Right around somebody's birthday, April 7th, right here, right there. We made the low of it on April 7th, right? Somebody's birthday. Right? So we went to the smart money reversal April 7th. And now it's June, we're going into June 6th trading. So we've been on the right side of this market maker buy model for a few months now. Right.
Smart money, man. On April 7th, man. Smart money. Says it all.
I don't know how smart that money is. That might be the dumb money on the wrong side of the trade. Let me see it. So we repriced that. Okay, now we traded all the way back up to the upper quadrant. Right. So right now, looking real bullish because we gapped down to reprice the entire imbalance. And then we still got like 2 hours and 10 minutes left on this 4-hour candle. And we traded all the way back up to the upper quadrant, right? Non-stop. It's just been a run up. Right. So watching this 4-hour candle, see if we close back above this, if we immediately reclaim this, meaning get back, close above it, and then use it for support. Right? If we immediately reclaim that, that's what I'm watching for on the 4-hour time frame. Right? And even if we don't immediately do it, just looking to see if we get a 4-hour closure back above here and use it as support on the 4-hour time frame. All right. So right now we're inside this bullish dealing range, right? This the bullish dealing range that we're inside on the 4-hour. Right? So that right there is the lowest low. Today's high is the highest high, right? This is internal sell side right there, right? For the overall dealing range that we're in, we've come back into a discount of the overall dealing range, right? This portion of the dealing range right here, right? Looking at this as a balanced price range. So not taking this sell side will be okay for me because this retracement back into the discount brought us back into the balanced price range, right? And we also got a inversion. Is there a gap there? Close 372.25. Open at 517.50. And this right here closed at, wait a minute. Close 372.25. Why is this not changing? Okay. Close, open, 517.50. Close, 518. 17.50, 18. So there is a little space in there. Yes, there's a little space in there. Right. So, okay. Yeah. So we got this balanced price range here. Okay. Bullish order block, inversion fair value gap. All right. Trade down to equilibrium, lower quadrant, right? Respecting the upper quadrant of the fair value gap, gap down, reprice this BISI, trade down below consequent encroachment of the inversion. Now we're pushing back up. We're all the way back up to the upper quadrant of this BISI here. So this is acting as some strong support right now above this balanced price range. So that's why I say not taking this would be okay with me, because the lower portion of this dealing range was efficiently delivered down here. So just focusing on this portion, the expansion leg of the dealing range, right? We've come down to a deep discount, repricing the last inefficiency in this area there, coming down to the last down close candle of the bullish order block there. So not taking that, I'm not mad at that. And the way we're trading right here is pretty strong. So we're gonna see how that play out. 60-minute time frame. 60-minute time frame. We are, yeah. Where's my, oh, there's my new day opening gap. Get out of the way, 4-hour thing. Right. So 60-minute time frame. We don't have any, we're not making, coming down. This is the only SIBI that we made, and it's all the way in the premium of this move here. Right. So only thing we did, what I'm looking at is we came down and repriced all of these imbalances here. Did we get all the way to the low of that one? Fell short of the low of that one. Wish we would have repriced the whole. If we would have repriced the whole thing, then I'd be like, oh yeah, we done down there. But you know, just saying that's close enough for government work, because all of this is pretty efficiently delivered over here. So a lot of overlapping candles here, right? No imbalances coming down. So just offering sell side for this buy side inefficiency, right? Buy side inefficiency, and just offered all sell side coming straight down, right? Came over here, got a balanced price range there, balanced price range here. That's on the 4-hour. We already saw that, right? We offered buy side and sell side there, left that area, right? Got a buy side inefficiency here, right? Very efficient delivery, right? All of this right here is a balanced price range. Once we leave it, this is the sell side to that buy side. Okay. Right, sell side to that buy side. Now we're coming back up. Not didn't create in it now. Let's see if we start to create fair value gaps going up. Still not creating, and we ain't creating no fair value gaps going up either. Strong move up at 6 o'clock. One solid green candle, no bottom wick, very small top wick there. Right, solid move up, closing above consequent encroachment of the 4-hour fair value gap. Drop back down, consequent encroachment started to move back up. All right, no imbalances to look at on the 60-minute time frame. All right, 15-minute time frame. Created one SIBI in the discount, right? Created inversion fair value gap, and then used it as support. Right? So created a SIBI here, used it to engage the sell side, right? Traded up to the SIBI, took the sell side, right? And then once we took the sell side, we created a SIBI going into it with the close, the open and the close, right? It was coming down, stopped there, and then with the open, right, created a SIBI there with the open and the close. But that SIBI immediately became an inversion fair value gap, and then used it as support to go up. Now we're accumulating right here, right? No imbalances to think of there. So the only thing you got to watch for up there is consequent encroachment of this wick and this SIBI here. Right. You got that SIBI there. Traded up into it here, drop down, trade it back, drop down, right? Got a little portion of it still left open, right? This is the only piece that's left open right now that hasn't been repriced. That's the entire SIBI right there. Looking at, you know, what Michael was teaching about the 15-minute fair value gaps. Right. We have 15-minute fair value gap there above price. Right. Just created one here. Right. Got one there, right? We already used this one here to send us up, right? Create the inversion, right? Drop down, right? Came up here. This actually, with is there a volume imbalance there? No volume imbalance there. Okay, so all right, so created the inversion, right? Create the inversion there, trade it back down into it, use this one to trade back to that one. I mean, no, we can't use that one because that one ain't exist yet, right? So we got this one below us, right? And now we got this one here. So watching these fair value gaps, right? If we get heavy here, can look to see if this one goes back to that one, or if we use this as support. Right now, we're respecting consequent encroachment, right? If we use this one as support, right? See if it can get back to this one, right? Using the ranges as your dealing range, right? Get bullish signatures to see if you can go from here to there, from the high of this to the low of that, right? If we get heavy, right, with the right signatures, this ain't much of a move there. Let's see what that is. Come on, man. Ain't number like 15 points, right? I'm like, that'd be worth it. But from here to there, yeah, it's like 76 points. Definitely worth it, right? Using those as your ranges. Looking at came from here to there, right? Came close to equilibrium of this high to that low. That's the last high before dropping. Came very close to equilibrium. Didn't get back to a premium, right? Close to equilibrium now. So we still in a discount there. Never traded back up into a premium, right? Got a bearish order block here, resting in the premium, right? Didn't even come up into the wick of that. Tim, do we have chart set up in Discord? Chart setups. What you mean? No. I don't know what you're talking about, so no. I don't know how long that's been in there, but I don't know what you mean by chart setups. I don't whatever it is. No, we don't. Don't need that. Excuse me. Who's this? Oh, it's the 4 hour. That was the 4 hour. Let me mark this so I know what it is. Where's my that a busy? I think that was a busy. That was a 4 busy one. Don't need that. Don't need that. Don't need that. Yeah, that's it. That's all I'm looking at. That's all I'm looking at before. Now, while I'm in here, might as well look at this right here for my shout out to the Asian assassins. Gap down below liquidity, set a low, came up, set a high, took out the high, tricked in shorts, right? Stopped them out, retrace back into the imbalance, trade back up to the low hanging fruit. And it's still doing it. And it's still doing it. And it's still doing it. All right. That's it, man. I appreciate y'all for listening to me and my brother run our mouth about some everything in the world. Me sit here and update the charts. Tomorrow is Friday. Diamond members, we got tape reading in the morning. Set it up now while I think about it. Oh, I'm on Zoom. I'm on Zoom now, so it won't let me. Where's my? I thought to show me my calendar. I thought it would show me the calendar. Do I got to stop sharing my screen to show the calendar? How do I? Oh well, I guess I got to do it once I get off. All right. All right, then. So, Discord. I'll see y'all. Oh, there it is, right there. I guess I had to stop the. I had to stop sharing the screen. All right, so tape reading. I'm just doing this here because I be forgetting stuff. Because I promise you, I will say it right now. And as soon as I end this live stream, I get up and walk away from the computer and forget to make this. And I'll be sitting there in the morning like, where everybody at? And y'all be sitting there messaging me on Discord, talking some Tim, are we having a tape reading session today? And I'll be like, what do you mean? Why? And I look in there and don't no link be inside there. I'm like, oh, my bad. My bad, y'all. Well, our eye. Well, our eye. Well, our eye. I sorry. Well, our eye. I sorry. Tape reading session. Apex having a 70% off sale, y'all. My link in the bio. That's my code right there. I don't have a fancy code. ZYWWMIBQ. That's my code right there. Use that at checkoff. They're doing 71% off right now. If you're ready to try your hand at a prop firm, hey man, try Apex and use my affiliate link. If you're not ready to try it, don't try it. Don't sit up there and be like, oh, I'm gonna try it, then I'm gonna get a payout. No, learn how to trade first. Go look at the Art of Reading Price Action playlist and learn how to trade first. Speaking of learn, uh, y'all be ready for Back to Basics video series. All right, Back to Basics video series coming to WAP soon. Soon is relative because I got it recorded, but coming to WAP soon. It's going to be all inclusive, man. Everything that I've ever talked about on this channel, from an absolute beginner who don't know what a brokerage account is, all the way to an advanced intraday trader, it's going to be something for everybody. In the video, it's the same. All of the stuff that I did when I was doing discipline over dollars, doing live seminars, standing in front of people, standing in front of grown people, standing in front of kids, talk about all kind of stuff, IRAs and different accounts and money market accounts and what's a candle and how to trade futures, how to trade options, everything I've ever talked about, it's gonna be in here. And the gang, y'all get access to it for free. If you're not in the gang, or if you haven't been a part of the gang prior to May 27th, 2025, you will have to pay for it. It's going to be a small amount, right? For sure, less than 100. I'm thinking more around 50. Depending on how much work I put into it, might be 75, but around $50 maybe. Gang, I'm not blocking my blessing. If y'all just want to buy it anyway, hey, knock yourself out. I ain't blocking my blessing, but y'all have access to it for free. Well, why, Tim? Because it's everything that I already talked about before, and I just can't see, you know what I'm saying, charging y'all for the same information again, right? And like I said before, I ain't doing no more workshops because don't nobody be pulling up to the workshops but the gang. It's like I keep charging y'all over and over and over and over for the same information. So I ain't doing no more workshops because ain't nobody pulling up but y'all. Y'all go in there, y'all buy up all the slots. And maybe I don't really advertise that much, so other people don't be tapping in and y'all just paying for the same information over and over. That's why I ain't doing no more workshops. What was it? Oh yeah. So back to basics. That's what we're gonna be doing. Back to basics. Hong Kong Fooey. Hong Kong Fooey. Oh. Hong Kong Fooey. Hong Kong Fooey. Hong Kong Fooey. Who's over here for the people smart enough to screenshot links. And then everybody mom be pulling up to the live stream in the morning. Not smarter than me. You're
It's
not
free advertisement.
free
Free advertisement, man.
smarter than me. Hong Kong Fooey. Hong Kong Fooey. I remember Hong Kong Fooey. Ooch Nach Na. Hong Kong Fooey. Grieve ape. Beagly. Beagly. All right. So now it's posted in the Discord. So I can't forget about it. I'll see y'all in the morning for the tape reading session at 9 a.m. Look like we are continuing up a little bit. We're above that quadrant level, right? We're above. Who know what? Who from the Asian session know what model that was when I said it's still working? Which model was that? Anybody here still from the Asian? Who in here from the Asian session? What model was that? I said it's still working. Y'all sleeping? I take that as
My one of the model Jim made up.
the one Jim gave the name.
The dog.
Not the dog. It wasn't the dog.
Oh, no. We got them inside them notes, right? They somewhere in them notes.
It wasn't the dog. What was the name of the dog?
I forget. I just know it was a dog.
Shiba Inu.
Yeah, Sheba.
Shiba Inu. And what was the other one?
I don't know. I gotta look in those notes and see.
It was a rap group.
Dawes Effects.
Oh my God. Oh my God.
He said a rap group
From Atlanta. A rap group from Atlanta.
Oh man, that could be anybody. I'm gonna go with Cass though, or Goody. Cass or Goody. They're the only two worth mentioning.
It was two of them. It was two
Cass,
guys.
Outcast.
It was Outcast. It was two guys. The beginning and
Yin
the
Yang.
end.
Okay.
Yin Yang.
Yay.
Cass. Outcast. Pronounced Outcast.
Yeah, that's the only thing worth mentioning. Group in Atlanta. Sure.
Anyway, y'all, appreciate y'all for hanging out with me, man. The life of a 52-year-old retired man sitting around the house bored with nothing to do. I need to go in there and see if my son been sleeping all day because I haven't seen him one time today. The only time I saw him was when I went in his room to get something that I printed out on the printer. That's the only time I seen him all day today. And he was sleeping then. So I haven't seen it.
Hey, like Adam Sandler say, which one, wax on or wax off?
Wax on or wax off? Which one? All right, man. I'll see y'all in the morning. If you're gonna trade tonight, trade safe. If you're not gonna trade, take copious of notes so you can study what you saw and apply to your future trading endeavors. As y'all see, this stuff works, man. This stuff works. Be it through your back testing, be it through watching Michael talk about it, be it through, you know, saying whatever. You see that it works, right? I ain't got no magic wand. I ain't got no crystal ball. Y'all come on here day after day after day whenever I go live, and the levels that we talk about, the stuff that we anticipate, we see it playing out. We see it playing out. Ain't no way that I can talk about something that hasn't happened yet and then it happens in price unless this stuff worked. If it was just some random events that moved this market, I wouldn't be able to do what I do. You wouldn't be able to do what you do. This stuff works, man. If you're not, if you feel like you're not at the level that you need to be at yet, just keep studying, keep practicing, right? Being on here talking about price with you all, it helps me more than you know, right? Sit down, and you ain't got to start no YouTube channel, but if you sit down and just say the things out loud that you see in the charts, or if you get a pencil and write the stuff down that you see in the charts, it make it stick in your mind more, especially if you write it down. But just saying it out loud, letting you hear yourself say it helps a lot, right? So keep doing what you do, man. I'm proud of you, man. Until the next time I decide to get on Al Gore's internet and share my thoughts on their thing that they call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.